What's up, Struggling Nation? This is Unreal with Unreal Trading. This is how this year's gonna go. We're gonna make plenty of profits. What's up, Struggling Nation? This is your boy Unreal, bringing you some recap. I missed making the video last week. I got a little bit busy with my trades, and I was trying to think of new material to bring to y'all, what to share, what knowledge to bring to y'all that will be helpful in your trading journey. So last week I took a trade, made about a little over $1,200 profit. This was the first time in a long time that I traded another company outside of SPY. So I traded Apple and Microsoft. This week I think in Apple I ended up losing $30, but that's because I sold early. But I'll get into those trades later. But Microsoft I held, bought a weekly call option on them. I think I bought them Monday if I remember correctly, ended up selling them on Wednesday, maybe, for a little over $100 profit on them. I actually sold them early. Got out of that trade too early. Had I held a little longer, it would have been a little bit more profit, just because Microsoft and Apple, they had earnings last week, and due to they reported a good earnings, their earning reports was good, profits on them shot up, and I sold early, which also shot up SPY. And I sold them early, but I still, like I said, I still netted $1,200 profit. So not crying over spilled milk. Any profit is a good profit. So we stayed in the green, still in the green so far this year. But this is the first time that I traded another company. Usually when I trade, I stick to SPY. I love trading SPY. If anything I'm going to trade, it'll be the Qs. I didn't trade the Qs. I haven't traded the Qs in probably a little over a month, maybe a little longer. But I've been sticking with SPY. For new traders out there, why I do this? I do this because you gotta master one. You gotta get good at one stock. SPY and the Qs are very liquid, so trying to master them is an easier journey than to try to master them and all these other stocks. It's just too much as a beginner trader. Your eye and your mind is not trained, and muscle memory is just not trained to see what experienced traders see. So you just take L's, and then you'll wonder why your account is a roller coaster. Sometimes up, most days down. Is because you're just stretching yourself out too far. So I only trade SPY and the Qs just because I want to master trading them. And really, to be honest, if you master trading SPY, you really don't have to trade any other stock. SPY determines in which direction the market is moving. If SPY is trending up, it's in the bull trend, and that means the market's in the bull trend. If SPY is in the bear trend, and that means the market is in the bear trend. Versus the Qs, if the Qs is in a bull trend, then all the banks are doing good. If the Qs are in the downtrend, then the banks are doing bad. It's just stuff to keep in mind. If you trade just that one company, you could be profitable and be successful at trading just that one company. You don't have to jump around. So it's easier to master, it's easier to study, easier to see the patterns on SPY. That's why I only trade SPY. Another thing that's new, I shared before, I didn't paper trade. I said I just didn't like, has a little lag, and I didn't like the lag in paper trade, even though no matter how you trade, if you're trading, battery went out on me. So getting back to what I was saying, so I didn't paper trade before. So the last 2 weeks I've been paper trading, and I noticed this, and I want to share this with you all as new traders. Paper trade is actually really good. I see why all the successful traders say you should paper trade for a while before you actually play with real money. What paper trade does, it sharpens your skill as a trader, especially as a new trader. It sharpens your eye, muscle memory, when to get in and when to get out, as far as what you think the market is doing based on what you're reading off of price action. So paper trading allows you to do that without it affecting you and affecting your account and hurting you emotional, physically, mentally, and everything else that comes with actually trading with money. So I actually recommend 100,000% if you're a new trader, paper trade. Paper trade for a year. Get in the market and paper trade every single day. Or if you can go longer, paper trade as long as it takes for you to home in and master that skill to take your trading to the next level. I traded for the last 2 weeks, and I think total I've netted maybe somewhere in the span of 5 to 6 grand in profit off paper trading. And that's just, getting in and getting out where I see price action is going. Even when price action is going against me, I've had losses, but remember, I have stop losses, and once I hit that stop loss, I'm out. Aside if I actually don't set a stop loss and I just get in the trade, then I have a number amount. So once I lose $100 to max $200, I'm out the trade anyway. So I went in with that same strategy that I use when I currently trade live, and like I said, it worked for me. I was able to be profitable, and I'm able to home in and sharpen my skills as far as entry and exit points. Because of earnings, I traded Apple and Microsoft. So I share my screen, share my plays. Hope this helps. Hope this started the day gap down, and then it was trending down. It had a slight couple pullbacks and trended down the whole way. Got all the way down to this bottom here. I had set up a support line there. Saw price action going sideways, so I had set a support line previously. Saw that, I said, okay, price action is bouncing here. It came back up and bounced, broke the structure here. So you can see, this was the trend. The trend was down. It's a bear. It was a bear market at this point from the start. A bear trend day. It broke here out of that trend, and then it broke structure here. This was the pullback that it broke right here. Price action came up here and broke, came down, retest this area here where it went sideways, and then shot up. Came down, tested this top a couple times, shot down, then came back and retested. I got in here thinking that price action was going to continue to go up. And remember, my whole when I bought this option contract, I was buying to swing trade it. I was buying thinking, since it was earnings week, that was going to push the market up. Money was coming back in the market. Previous week, a lot of money was coming out of the market. This week is earnings week. I figured a lot of money was going to come in the market. So I got in here. Like I said, it wasn't a great entry on my part. Got in here. Price action came in. Double candle, double top, shot down. So now I'm losing here, but I held it. I said, well, I'm going to hold it, swing trade, see what happens. Price action came down, my previous support level, went through it, kind of tested it, went through it again, came up here and tested. Now it's going sideways. So at this point, I was confident that maybe price action might reverse and go into a bull trend the following day, based on price action just bouncing right at this area, the support area that I had. It was just kind of going sideways. It didn't go all the way through it. It did go through it, but it didn't go massively under it. But it stayed right in this area. Towards the end of the day, a lot of buyers came in. Saw that the volume increased towards the end of the day. Pretty much the last 5 to 6 minutes of the day, a lot of buyers came in. So now I'm going in the next day saying, okay, let's see if that pushes price action up. Next day, what happens to price action? Gapped up. All the way up here. Gapped up. Saw this first candle where there was a little confusion whether the bulls were going to take over or the bears were going to take over. Saw this. The bears didn't have enough strength to take over. They kind of just sat back, let the bulls do their thing. Next candle went up, opened up higher than what the previous candle closed at, or lower, I'm sorry, and shot up. Shot up. When I saw price action going sideways here, this is where I exited. This is where I took profit. Also, I had a resistance line set up here. If you're wondering why did I take profit at this particular spot. So remember, you look for points on previous days to determine where you're going to take price action. Now, you just don't pull it out of the sky. You determine it based on where the price action struggle to go through or come to or go through a resistance line or bounce at a support line, where the price action struggle at, and you look for these points. So I had this support set up anyway. Once price gapped up here, even before price gapped up the previous day, I'm studying and I saw this support line, this price action struggling to go up in this area here. As you can see, if I draw this line even further to the left, you can see price action struggled in this area. It was coming up here bouncing, came down, bounced at it, went from resistance to support, went back to resistance, back to support, and it kind of just stayed in this area. So once price action came to this area, I had a feeling that price action was going to struggle if it didn't just shoot through there with momentum, with volume. Didn't do that. It got up there and it struggled. It went sideways. And me thinking possibly, because you know I love to trade the gap, me thinking this is just me reading price action and me thinking, and based on previous experience so far, the gap usually comes back and gets retested. So I didn't want to lose my profits here. So once I saw this and I saw price action going sideways, got out, took profit. Price action came down here, bounced at this level, went up, came back and tested this level again. This is Monday and I'm ready to buy on Monday. I'm going in Monday based on my belief that Microsoft is going to have a good earnings report. Set my first support line here. Set a support line. I also set a resistance line here. And this is Monday. Price action came down, bounced, went up here to retest this high, came down, didn't quite come down here, came in this area but didn't quite come down here, came up here, bounced, came close but not all the way, bounced right in this area, came back up here, tested this resistance area. That's why I set my line. Saw price action doing this. I got in here. Once I saw that price action was failing to go down, I said, okay, maybe price action this is probably the low of the week, which I read too much into it. The low of the week, and as the days come up, gets closer to the end of the week, gets closer to earnings. I think they reported on Tuesday night going into Wednesday. By Wednesday, I should be selling. I'm figuring price action reaches low point. So I got in here. I got in early. I got in here. So you see price actions went sideways on Monday. Just went sideways. Institutions weren't ready to reveal their move. They were not ready. Just went sideways. Went through my support line, not all the way, not too far down, and it just kind of stayed in this area and came up. I said, okay, let's see what price action does. After the market closed, it kind of stayed in this channel. Pre-market on Tuesday, stayed in this channel. Came up with high volume here, and then shot down. I said, okay, well, maybe they're gonna have a bad report at this point. But like I said, I bought a weekly call option on this, so it didn't expire till Friday, so I wasn't in no rush to sell. So let me hold it and see what it do, if I can still net a profit out of this. Price action came here, with heavy volume pushed down. That was an institution. When you see a big candle like this, it's an institution. No retail traders, no traders like me or you can cause this. So this is straight institutions. They came in heavy, pushed price action down. Came up, retest a little bit, and just pushed price down. Down, 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 down. This is Tuesday. I'm watching the market Tuesday. Again, going into after hour trading, a lot of volume came in, pushed price action down even further. Stayed kind of in this range, then heavy price action came in because now they're going to report going into Wednesday. You can see the E here. They're going to report. This is after hours. Markets closed. They're going to report Wednesday. Institutions already get the news before we do. They already know what's going on. They already know what they're going to release. They already know if they made a profit, if they didn't, if they're struggling, if they're laying off employees, if they're cutting supplies. They know it all. So they got wind of that. As you can see, this big candle. This is after hours trading. We can't trade that, but after hours trading, push price action up. Said, okay, let's see what happens. Came down and retested a little bit in this area in pre-market. And price action went up sideways here after they released earnings. This is where, let's see, where did I sell? I sold in the morning. So when I saw price action come down in pre-market, but failing to push down, again, I set another support line. I said, okay, let's see what price action does, because it has a tendency to do this as well. Because mind you, Microsoft is one of the companies that I've watched before. I might not trade it, but I still watch other companies and see if my strategy that I'm using will work with these companies. But I only trade SPY. I just feel more comfortable studying one, but I just try to push myself to learn more, which you should, just to see other markets and see other companies, how they're moving, see if I could spot the trend, see if I could read price action. That's what I do with these other companies. So I'm constantly watching to see what they're doing. So I set a support line here. This is pre-market, before the market opens. This is what price action is doing. I say, and I've seen companies do this. Tesla does this a lot. They'll come in the morning and they'll trade sideways like this, and they'll come as soon as the market opens. That very first candle come down and come and test the low of the pre-market or the low of the aftermarket the previous day after the market closed and the selling was going on. It might come and retest that low. The candle comes down, touches that low, shoots up, price action shoots up. Maybe 10, 15 points. In Tesla's case, it might move 30, 40 points. But I saw this, so I set the support line up, saw pre-market come in, this candle come in, come down here. I said I waited, didn't sell. I said let me wait, see what price action does. If it continued and my support line didn't hold, I would have sold and took whatever profit I had at that point. So I saw this candle come in, go down, test that low, as you can see. Test that low here, and then shot up, shot up, shot up, and then come in, counter with some resistance in this area. So I saw this red candle come in. I got out. I got out. I got out. This is where I got out on Microsoft. So longer, yes, but I wanted to secure profits. I had profits in my hand, and like I've heard traders say this always, and this is one of the rules I try to stick with and keep in the back of my head. If you don't take profits, somebody else will. So those are the trades I took last week. I'm gonna put up some pictures of some of the paper trades that I took, just to show you the profits that I take, and of course you'll see me trading SPY. If you haven't traded, if you're new and want to start trading and want to start doing options, or even if you want to just trade shares, paper trading is the best avenue to go. The complete best avenue. If you get educated from somebody who shows you exactly what to do, show you what trends line are, show you what moving averages are. Maybe if the videos that you watch that I'm putting up on here, sorry about that, if that helps you to understand what moving averages are, trend lines, Fibonacci retracements, candles, price action. If it helps and you want to start trading, paper trade. You'll probably hear me say this on every video when I start. Before I get into my trade, I'm going to say, if you haven't paper traded this week, you need to as a new trader. It's going to better your skill and it's going to take your trading to the next level. This is Unreal with last week's recap. I'm going to try to keep my videos consistent every week, because I missed last week. Like I said, I just got busy with my trades. So I hope this trades help. Hope this takes you down trading to the next level. Hope this information helps. It's free. Take advantage of it. And if you need more, shoot me a message. It's Unreal signing off. See y'all on the next one. Stay green.